Hello and welcome back to my channel. Today I'd like to discuss ChatGPT and what it can do for us in determining our taxes, our traditional versus Roth 401ks, and give us some insight on what is the best way to allocate our money in certain ways. So let's get started. Quick disclaimer, this is not tax advice. This is just for entertainment and information purposes only. Please consult your tax consultant for more information. Thank you. So what we have here is ChatGPT, and I am already logged in to ChatGPT, and I will simply ask it my questions. So what I want to put in here is, let's say I make, I am an let's say 35-year-old married, making let's say 80K a year. Okay, and let's see, wife is making no salary income. What would my taxes be if I invested into a Roth versus traditional 401k? That's what it says. Here we go. So it says I'm in Michigan. Also consider state taxes. Here is tax liability if you invest in Roth 401k versus traditional 401k. Okay, so it knows my assumptions are what I put in there. Married finally jointly, which is correct. No other significant deductions beyond the standard deduction of $29,200 for 2024. Okay. No other income sources. Michigan state tax of 4.05%, and 401k contributions. Let's assume you contribute $10,000 to either a Roth or traditional. I actually want to tell it to max out these in a second, but let's see what it's going to go here. So Roth 401 contributions made with after tax income. So if your taxable income remains at 80,000, so we get 80,000 minus the 29.2, which is the standard deduction. So we're down to 50K, 50.8K, and then federal tax calculation on the first 10% because the taxes are based on tiers. So if you're within a certain bracket, you are the 0 to 10, then I think 0 to 12, or I'm sorry, 10 to 12, and then it goes 12 to 22 after that. So right here we're at the 12%. Anything above 50,000, which then we would be taxed $3,312 on this. And so my total federal taxes are $5,632. Okay, Michigan tax $2,059, and total tax liability $7,691. Okay, now it's breaking down a little further. So that was scenario 1, which was the Roth 401k. Scenario 2, here we go. Traditional 401k contributions pre-taxed. So if you contribute $10,000, your new taxable liability income is $70,000, and so we take your $70,000 minus your $29,200, and then we come up with $40,800. Okay, federal tax. So on your first 10%, you're taxed here. On anything between 40,800 and 23,000, or anything between that and this, you are taxed at 2,112. So our federal tax rate is 4,432. So and then our state tax is right there too. So we could see it makes a difference now, which is good. Okay, it broke it down to total tax with Roth, total tax with tradition, and then a tax savings. All right, and then it's giving me final thoughts. But I want to ask it an additional question. I want to ask it, I want to max out my 401ks. I want to max out my 401ks. Let's see what it does now. So it should allow us to contribute all that money to our 401ks. Now we'll see a much bigger reduction in our income. So Let's see what it gives us here. All right, so max Roth. All right, because of the Roth, we must pay taxes right away. And if we're making $80,000 right now, we have to pay taxes on that $80,000. Okay. Um, of course, the standard deduction reduces that amount, but we still have to, pay taxes right away. So from this one, we'll just break it down right here. So tax with Roth 401k, so 7,691. With this, we have to think about our current and future tax brackets. So let's say today you're at the 10 and 12% tax bracket, and then later on, let's say you're making $150,000 a year, you'll be in a different tax bracket at that time. So the better idea is to pay those taxes when you're making lower income right now, and that would be choosing the Roth. So if you were making $150,000 a year, you would be in a much higher tax bracket. So then we would probably try to move over to a traditional IRA or traditional 401k, because you would be in a different tax bracket. And once you retire, now you'll be getting zero income. That's the time at which you take your traditional 401k money that you have and you start doing your Roth conversions. And at that time, you're making very little income, and that little income then reduces your taxable liability, and then you can move that money over and do a Roth conversion, and you pay the taxes on that money when you're at that very low income bracket. All right, let's plug in here that we got these we got a savings here, so it's telling us that we have a savings, okay, of $3,693. But let's say that we got a raise and we are making 150K a year now. Change to 150K a year, and let's see what they come up now. They might change their mind, so this I would probably say that it will change its mind. So it's putting me, oh, yeah, I dropped into the 22% tax bracket now. We'll let it finish this. And we can see our total tax liability. So do we want to pay those taxes now, today, or do we want to pay those taxes later? All right. So it all depends on what tax bracket we will be in later on within our life. And will we be making a lot more money at that time or a lot less money at that time? Will we be retired, or will we have additional, W-2 income? All right, here we go. So we're going to go over the Roth scenario again, and we're going to say the Roth, you would have to pay some of that money within the 22% tax bracket. And why don't we try to keep that tax bracket low? So I would say if you're making $150,000 a year, now's the time to start putting into your traditional 401k, because later on we can move that money to a Roth in a lower tax bracket. So here we go. So total tax liability is $17,000, and then total tax liability is $23,000. So that's a difference of five or so $1,000. Let's see, did it max out my 401k? It sure did. So yeah, we're making a lot of money. So this is the best that we can do. So we've made a savings of $5,000. So if later on in life you go to retire and you did this scenario right here, which was put it into your 401k, traditional 401k, you would then pay a different tax bracket with this amount right here. I do like these key takeaways here. So it says traditional 401k saves you nearly $6,000 in taxes today, making it attractive if you expect to be in a lower tax bracket in retirement. And then a Roth 401k does not save you money today, but your withdrawals in retirement will be 100% tax free. Okay? And since your income is higher, a mix of both, a 50-50 split, may be a good option to hedge against future tax uncertainty. That's, in my opinion, it all depends on where you think you're going to be in the future. Are you going to be putting in 10 years of work? Are you going to be getting those raises within here? you get, those raises, you're making $150,000 a year, maybe $200,000 a year, then that's when you need to think about this, and you want to reduce your taxable income now. That's my opinion. All right, that concludes our conversation about ChatGPT and what it can do for us. Yeah, I advise many of you to give this a try. I think it's a good first option. Before you get a CPA or a tax consultant, you can check with ChatGPT and figure out for your circumstances what is the best. And so, good luck.